How do we know that Buffett genuinely recommended every book on this list? You might wonder. Buffett himself is a voracious reader, as most of you may already be aware. He reads for 80% of the day. For today's video, we will be going to talk about Warren Buffett's 10 books that him billions. Let's get started. Business Adventures: 12 Classic Tales from the World of Wall Street by John Brooks. Bill Gates, a co-founder of Microsoft Corporation, requested Warren Buffett to recommend his favorite business book shortly after the two men first met in 1991. Mr. Buffett didn't miss a beat before choosing this time a collection of New Yorker articles from the 1960s. As Mr. Gates recalled, the book contains notable and fascinating accounts of some of the largest companies of the mid-1900s that are as relevant today to understanding the intricacies of corporate life as they were when the events happened. Stories about Wall Street highlights the intrigues and erratic nature of the financial sector and are packed with drama and adventure, whether he is examining the astounding market crash of 1962, the demise of a renowned brokerage firm, or the daring attempt by American bankers to save the British pound. John Brooks' insightful reporting is so full of personality and critical detail that one gets the impression that history really does repeat itself. Common Stocks and Uncommon Profits by Philip A. Fisher. Philip Fisher is one of the most significant investors in history and is widely recognized and admired. His investment principles, which he articulated about 40 years ago, are still widely accepted as gospel and are not only studied and used by today's financiers and investors. His book, Common Stocks and Uncommon Profits, published in 1958, devotes careful attention to this concept of networking and gathering information via business contacts. Fisher recommended targeting businesses for investment that had growth orientation, high profit margins, high return on capital, a commitment to research and development, a superior sales organization, a leading industry position, and proprietary products or services. He was known for conducting extensive research on businesses he would invest in. To research companies before purchasing stock, he turned to his own contacts, the business grapevine and chat. Warren Buffett said a thorough understanding of the business, obtained by using Phil's techniques, enables one to make intelligent investments commitments. The Little Book of Common Sense Investing by Jack Bogle. Jack Bogle, the CEO of Vanguard Group and a prolific investor best known for creating the first index fund, an author of multiple books. The Little Book of Common Sense Investing is probably his most famous work. In a time when everyone tried to beat the network with great stock picks and then charge expensive fees for it, he thought, why not just mimic what the indexes are doing and not manage anything? This small idea grew into one of the most popular investing theories of the century that followed and one of the most reputable investment firms in the world. By introducing you to low-cost passive index funds as a long-term investing strategy, the book demonstrates an alternative to actively managed, poorly managed, overpaying funds and explains how they can help you save for retirement without the normal bother of stock investing. He claims that the majority of your assets are better placed in secure, affordable index funds, and that picking the least expensive index funds is a safe bet. For the record, Mr. Buffett has frequently stated that most investors would be better served by purchasing inexpensive index funds. Essays in Persuasion by John Maynard Keynes. Essays in Persuasion, written by legendary author John Maynard Keynes, is widely considered to be one of the top 100 greatest books of all time. The essays in this collection depict Keynes' attempts between 1919 and 1940 to sway public opinion in order to change the course of events. Keynes predicted the economic turbulence that would afflict the economies of Europe and United States with outstanding precision, and he even suggested policies that, had they been adopted at the time, may have prevented a period of global depression. Keynes' opinion of Soviet Russia, the demise of laissez-faire, and the potential for economic growth are still pertinent today as they were then. Mr. Buffett has flagged this collection of writings from the noted economist both for the importance of its ideas and the clear way they are presented, while Mr. Keynes is now known and in some quarters vilified for his work as an economist. He also devoted a fair amount of thought to stock picking. Mr. Buffett has deemed him brilliant at both callings. Reading Keynes will make you smarter about securities and markets, he told Outstanding Investor Digest in 1989. I'm not sure reading most economists would do the same. The Most Important Thing: Uncommon Sense for the Thoughtful Investor by Howard Marks. Howard Stanley Marks is an American investor and writer. He is the co-founder and co-chairman of Oaktree Capital Management, the largest investor in distressed securities worldwide. The Most Important Thing outlines the formula for profitable investments, as well as the risk that can wipe out money or end a career. Mark teaches by example, describing the evolution of an investment philosophy that fully embraces the complexity of investing and the dangers of the financial world, using passages from his memos as examples. In a book that is equal parts narrative and creed, Marx brilliantly applies insight to today's tumultuous markets and offers a number of overarching lessons. Second-level thinking, the price-value relationship, patient opportunism, and defensive investing are just a few of the ideas that Marx elaborates on, frankly and honestly assessing his own decisions and occasional missteps. He provides valuable lessons for critical thinking, risk assessment, and investment strategy. In today's post-pandemic global market, where companies are still finding their footing, these are important values to find a solid investment. The Outsiders by William Thorndike, Jr. The Outsider is a book that highlights the amazing success of CEOs who adopted a fundamentally different approach to business management. It was listed as the #1 book of Warren Buffett's list of recommended books to read in the Berkshire Hathaway Annual Shareholder Letter of 2012. Author Will Thorndike uses his analytical expertise from a successful career in investing to analyze the performance of businesses and their executives in this energizing, surprising book. Thorndike talks about 8 individualistic CEOs whose firms' average returns outperformed the S&P 500 by a factor of 20. In other words, an investment of $10,000 with each of these CEOs on average would have been worth over $1.5 million 25 years later. The Washington Post Company, Berkshire Hathaway, General Dynamics, and other well-known companies are among those on this list. These outsiders avoided Wall Street, the press, and the newest management fads because they were modest, quiet, and frequently inexpensive. This book is a must-read to learn the traits and methods, striking for their consistency and relentless rationality, that helped these unique leaders achieve such exceptional performance. The Clash of the Cultures: Investment versus Speculation. This is another book from Buffett's 2012 letter. In this book, legendary investor John Bogle talks about the changing culture in the mutual fund industry. For regular investors like you and me, Bogle shares this list of 10 simple rules of common sense investing. According to Bogle, it may not be the best strategy ever devised, but the number of strategies that are worse is infinite. Dream Big by Christian Correa. This book was originally released in Portuguese, but after Buffett's endorsement, it was practically impossible to get any English copies in any bookstore. The Brazilian trio behind 3G Capital, the private equity company that owns Anheuser-Busch InBev. The private equity company that owns Anheuser-Busch InBev. And has collaborated with Berkshire on transactions to acquire H.J. Kraft Foods Group Inc. and Heinz Corporation. While Berkshire's partnerships with the firm are recent, Mr. Buffett's relationship with 3G's George Paulo Lemon go back 4 years. My friend and now partner, George Paulo, and his team are among the best businessmen in the world. Mr. Buffett said, "He is a fantastic person and his story should be an inspiration to everybody, as it is for me." Where Are the Customers' Yachts? By Fred Schweid. This book, which is also a timeless classic, pokes fun at some of Wall Street's pretenses. The title comes from the story of a visitor to New York who was admiring all the nice boats in the harbor and was told that they belonged to Wall Street bankers. He naively asked where the bankers' clients kept their boats. The answer: they couldn't afford them. Mr. Buffett once called it the funniest book ever written about investing, and said it lightly delivers many truly important messages on the subject. This book keeps enlightening investors about the truth of Wall Street by delivering sage contrarian advice and a realistic view of the world of investing, where brokers prosper while their clients fail. A light, fun read and something you definitely want to pick up, to have a laugh and, more importantly, learn about the world of brokers and managers so you don't lose out on your money. The Intelligent Investor by Benjamin Graham. It is regarded as the investing holy book, the book that Buffett first read. Warren Buffett previously remarked of the book, "Picking up that book was one of the luckiest moments in my life. That it is a classic on the fundamentals of value investing." After reading it, Mr. Buffett enrolled in Columbia University so he could take classes from Mr. Graham, and later went on to work for him. Even now, when asked a question about his approach to investing, Mr. Buffett is liable to cite specific chapters from the book. The book gives readers tips on how to use value investing and the stock market effectively. The Intelligent Investor is well known today, and many well-known investors have praised it for teaching them how to evaluate the stock market value and make wise stock selections for their portfolios. Value investing is the primary investment strategy that Graham outlines in The Intelligent Investor. Value investing is an investment strategy that targets undervalued stocks of companies that have the capabilities as businesses to perform well in a long run. Value investing is not concerned with short-term trends in the market or the daily movements of stocks. This is because value investing strategies believes the market overreacts to price changes in the short term without taking into account a company's fundamentals for long-term growth. The foundation of value investing is the idea that if you know a stock's true value, you may save a lot of money by purchasing it while it is on sale. This book is a must-read for beginners who want to learn how to accurately assess the market and avoid being influenced by trends. What did our topic educate you? Please share your thoughts in the space provided below. Please click the notification bell, give this video a thumbs up, and subscribe to Wealth-ology for more videos like this. Thank you for stopping by to watch. See you in our next video.